John Crypto here. Brace yourself because $7.2 billion just evaporated from Bitcoin ETFs in a matter of weeks. Yeah, you read that right. $7.2 billion gone. And check this. Yesterday alone saw $276 million ripped out in ETF outflows. At the same time, total Bitcoin liquidations in the last 24 hours clocked in at $145.9 million. But here's the kicker. BTC itself is still holding around $6,300 with a market cap of $1.34 trillion. That's right, the price refuses to die. Down 4.7% over the past week despite over $50 billion in daily volume, and yet somehow it refuses to fall into the abyss. $7 billion erased, but price refuses to die. That's not a market, it's a trap. Now connect the dots. The mainstream media? They're spinning it like it's healthy consolidation. ETF outflows are normal, they say. Volatility is cooling. Pure theater. Behind the scenes, the crypto world is bleeding. The crypto fear and greed index just plunged to 50100, the lowest ever recorded. Standard Chartered has flashed warnings. Bitcoin could crash to $50,000. That's a 26% drop from current levels. Ethereum, $1,400, down 29%. They're painting it as a minor correction, but the signals scream panic. Not random panic. The kind engineered by institutions and shadow operators who know exactly how to squeeze every last cent out of leveraged holders. Here's the truth nobody wants to tell you. This isn't a sell-off. Not even close. It's forced liquidation. Those leveraged ETF holders, they can't just exit on a whim. Redemption windows, settlement delays, all designed to lock capital in. Institutions are not panicking. They're being methodically drained. And retail, they're clueless. Every time the price dips below 60K, the masses panic sell, feeding liquidity into the hands of those who already control the levers. Retail thinks everyone's dumping. In reality, smart money is sitting back watching margin calls pile up, ready to strike. Volume numbers make it look chaotic, but don't be fooled. Daily BTC trading is anywhere from $42.8 billion to $50.8 billion. That's massive, right? But open interest? Still sky high. Liquidations are skewed to shorts, $82 million in short squeezes versus $63 million in long liquidations. Translation: the market is being whipsawed like a puppet. Prices are deliberately held in a range to trigger both sides. Shorts get squeezed, longs get nervous, retail panics, headlines scream, crash. And yet the big players keep collecting Bitcoin silently in the background. Here's the next layer. Retail traps versus smart money. Retail panic buys memes, PP, Shiba, Doge, chasing the next moonshot, while ETFs bleed out. Spot liquidity drains quietly, and over-the-counter desks scoop up the real Bitcoin at discounts hidden behind the chaos. The headlines scream disaster, volatility paints fear, and yet these institutions are laughing on the other side. They're not chasing the hype. They're collecting assets while everyone else is distracted by noise. And here's what you need to understand. This isn't normal price action. It's engineered. Every dip, every spike, every liquidation is orchestrated to keep the market unstable while smart money accumulates in the shadows. Retail is the lab rat, ETFs are the trap, and Bitcoin is the bait. You think this is just about price? Wait until you see where the actual Bitcoin supply is moving. Because the exchanges are going dry. That's right, the wallets are emptying, institutional accumulation is off the charts, and the real story isn't volatility, it's scarcity. And the next part? You're going to see just how deep this rabbit hole goes when we expose the supply crunch. The trap isn't over, it's just beginning. And that's where the real crime scene begins. Circulating supply is now at 19,788 to 18 BTC. Max supply, 21 million. Less than a million Bitcoin remain to ever be mined. Meanwhile, exchange balances are at multi-year lows. Spot liquidity is bleeding out while derivatives are exploding. You think the market is just volatile? No, it's being orchestrated like a heist. Every dip, every spike, every margin call, it's part of the trap. Real Bitcoin is disappearing from exchanges faster than retail can even blink. Now here's the leverage trap you've been warned about but probably didn't understand. ETFs, futures, options, paper Bitcoin. For every real BTC, there are 10 to 20 claims floating in the derivatives world. That's right, 10 to 20 times the amount of real Bitcoin. Same game as gold COMEX. Infinite paper, finite physical. You think you own Bitcoin? You don't. You own a promise of Bitcoin, a ledger entry that can vanish in a single margin call. And who benefits? The people who understand leverage the way the rest of us understand monopoly money. Institutions are the villains, and they've perfected this playbook. BlackRock, Fidelity, traditional finance titans. They market ETFs to retail like candy, collecting fees on the way. Investors think they're buying exposure, but in reality they're absorbing volatility, trapped in waves of engineered fear. Meanwhile, these institutions hedge through over-the-counter deals, quietly scooping up real Bitcoin off exchange away from prying eyes. While headlines scream panic, wallets controlled by smart money silently swell. It's the classic con. Create chaos, profit in silence. Here's how the bait and switch works, step by step. Pump ETF hype until retail floods in. Pull liquidity from exchanges. Trigger fear, panic, and forced redemptions. Scoop up coins at a discount, off exchange quietly. Every cycle repeats like clockwork. Retail doesn't even see it coming. They're too busy reacting to charts and tweets. Every crash is a setup. Every rebound is scripted. And the smart money? They just keep collecting while everyone else plays musical chairs with leveraged bets. Look at history, and the pattern is obvious. 2008. Banks crash housing markets, then buy up assets dirt cheap. 2020. Fed prints trillions. Billionaires scoop up stocks while retail chases memes. FTX. Fake liquidity. Real Bitcoin vanishes overnight. And now? ETFs replace exchanges as the new trap. The instruments may have changed, but the playbook hasn't. Finite assets, infinite promises, retail in the crossfire. Here's the kicker. This isn't just a Western problem. The real move is happening in Asia. The East is draining the West. Exchange flows show Bitcoin leaving American wallets and crossing borders into Eastern hands. OTC desks in Singapore, Hong Kong, and Tokyo are quietly taking delivery, while American ETFs bleed retail capital. The narrative in mainstream media. Markets are stabilizing. The reality, real supply is evaporating, and institutions are redirecting it eastward before most people even notice. And while ETFs and futures continue to pump fake liquidity in the headlines, the actual Bitcoin supply is consolidating into a few hands. The exchanges are hollowing out, leaving only promises, derivatives, and trapped retail positions. If you think volatility was scary before, wait until the West realizes that their supposed assets are being quietly accumulated by Eastern whales. Every ETF redemption that hits the system is a free coin for someone else. Every margin call, every panic sell is a payday for those who understand the supply game. Retail is left holding paper, while smart money stacks real BTC. And the big picture, the East isn't just accumulating, they're creating a chokehold. When the next major event hits, liquidity will be scarce and prices could spike in a way the West won't be prepared for. But here's the cliffhanger. While Americans are trapped in ETFs, derivatives, and leveraged bets, the next wave of accumulation isn't on Wall Street. It's in Asia. The East is quietly siphoning off supply, quietly positioning itself to dominate the Bitcoin market. And when that becomes visible, it will make the recent ETF bloodbath look like child's play. Flow of power is shifting, and you better pay attention. Asia isn't just dabbling, they're becoming the dominant buyer. Hong Kong ETFs are absorbing liquidity faster than retail can react. South Korean and Japanese retail investors are piling in, oblivious to the engineered volatility in the West. Chinese capital channeled through proxies quietly accumulates off-exchange, moving coins out of sight. The numbers don't lie. Bitcoin in local terms, Rs 18.9 million in Pakistan, Y 10.3 million in Japan, L 2.95 million in Turkey. Local currencies are collapsing under the weight of debt and inflation, and Bitcoin is becoming the escape valve. While Western media obsesses over price swings, the real story is about survival. and Asia is quietly winning. Now, connect the dots to the secret buyers. On-chain data is screaming if you know how to read it. Whale wallets are accumulating at record rates. Dormant wallets, silent for years, are reactivating. Large transfers are exiting exchanges into private custody. Who is behind it? Sovereign funds, central banks hedging against fiat collapse, or private institutions front-running CBDC experiments? The truth is, it's almost certainly all of them. Retail doesn't see it because it's invisible to the headlines. But if you're looking at flows, it's obvious. The real power is moving eastward, away from ETFs, futures, and leveraged paper. Policy pivots around the globe are accelerating the trend. The US continues to delay rate cuts, trying to contain inflation while keeping its financial system alive. Europe is drowning in debt crises, and Japan's bond yields are exploding, forcing local banks into reactive measures. Wars and sanctions are piling on capital controls. Every move that restricts cash flows pushes more investors toward Bitcoin as a neutral settlement layer. Unlike local currencies, Bitcoin cannot be printed, seized, or devalued by a single central authority. It's a global hedge in the truest sense. Meanwhile, the supply chain war is quietly heating up. Mining difficulty continues to rise, energy costs are increasing, and hash rate is becoming more centralized. Producing a single Bitcoin is now more expensive than ever, and that rising cost is creating a natural floor under the price. Every difficulty adjustment, every energy crunch is another barrier to cheap accumulation. The West may think it controls the market because they dominate headlines, but in reality, Asia is quietly absorbing coins at a price the West can no longer afford. Production scarcity is becoming an invisible ally to the East. Here's the subtle, dangerous truth. Bitcoin's market cap is $1.34 trillion, while global debt is $320 trillion. US debt alone is $40 trillion. Bitcoin doesn't need to replace the dollar. It only needs to expose it. The system, built on endless printing and artificial liquidity, is structurally fragile. Every pump, every ETF, every redemption cycle is a band-aid on a hemorrhage. The West may appear to control markets, but their leverage is on paper. Real Bitcoin, in private custody across Asia, is slowly undermining the dollar's dominance. And it all comes together when you see the pattern. Capital fleeing, collapsing fiat, sovereign funds hoarding scarce Bitcoin, Western markets trapped in derivatives, and energy-intensive production creating scarcity. The East is not just buying, they are structurally positioning to dominate settlements, transfers, and the future store of value. The West is left to manipulate headlines, print liquidity, and hope retail doesn't notice their position is weakening. And this leads to one unavoidable conclusion. The system cannot survive without printing. Every day, trillions in debt require artificial support. Every policy pivot, every delayed rate cut, every stimulus package is literally keeping a collapsing structure upright. And printing means one thing: destruction. Inflation, currency debasement, and loss of purchasing power are baked in. The West can delay, distract, and manipulate, but the underlying reality is clear. Financial decay is inevitable. What comes next is where the real danger and opportunity lies. Because when printing reaches the point of no return and destruction accelerates, the next phase of accumulation and redistribution will redefine who actually controls the Bitcoin market. And that phase won't be announced in the headlines. It will be enforced silently in wallets, OTC desks, and sovereign vaults. The question isn't if it happens, it's who will be left standing when it does. $40 trillion. That's the weight the US is carrying, and it's only getting heavier. Interest payments alone now exceed the entire defense budget. Japan's yield curve is breaking under stress. Globally, debt-to-GDP ratios are hitting record highs across every major economy. Sovereign balance sheets are bleeding, and every central bank in the West is trapped in a debt spiral with no exit. Bonds are no longer a safe haven. They are a ticking time bomb. Here's the kicker. The Fed has two options, and neither ends well. Raise rates and markets implode. Equities, bonds, derivatives all crash under the weight of leveraged bets and margin calls. Print money and the dollar collapses, inflation surges, purchasing power evaporates. Currency values die slowly, painfully, in plain sight. There is literally no third path. Every headline about stability is a lie. Every headline about recovery is a fake out. The system is broken, and the cracks are visible to anyone paying attention. Banks depend on this fragility. They need inflation to dilute debt. They need bailouts to patch losses. They need asset bubbles to maintain the illusion of wealth. Bitcoin threatens all of that. It undermines central bank control. It exposes fiat's fragility. It bypasses capital restrictions and monetary tricks. Every coin outside the banking system is a threat. Every whale accumulation in Asia, every dormant wallet reactivated, a reminder that the West no longer controls the game. Now the numbers are screaming, and the data is brutal. Conservative scenario, panic flush sweeps the market and Bitcoin dips to $50,000. Recovery scenario, markets stabilize and BTC hits $120,000. Scarcity breakout scenario, exchanges run dry, supply tightens, and Bitcoin rockets past $200,000. But here's the raw truth. The real number isn't in projections, it's in flow. It's in exchange balances, OTC accumulation, and sovereign movements. When exchanges finally empty, scarcity will dictate price faster than any analyst's model can predict. Listen carefully because this is survival advice, not speculation. Get out of ETFs. Get out of custodial wallets. Move your coins into self-custody. Hold the asset, not the promise. Every leveraged product, every paper claim is a trap waiting to liquidate you when margin calls hit. If you don't own the keys, you don't own the coin. Period. The headlines will try to calm you. The pundits will normalize the chaos. But the system isn't normal. It's engineered to bleed retail while insiders accumulate. Here's the final reality. Empires die the same way. Not in a single battle. Not from external threats. They die from printing lies faster than reality. Central banks inflate numbers, governments manipulate policies, and ordinary people are left holding depreciating currency, while the invisible hand of accumulation works silently in the shadows. Bitcoin isn't a gamble. It isn't another asset class to trade. It's an exit ramp, a way to preserve wealth and the ultimate hedge against a collapsing system. Mark this moment. Every policy, every rate adjustment, every headline is a countdown. Western empires are printing themselves into irrelevance while the East quietly secures the future. The money that disappears from ETFs, the coins leaving exchanges, the dormant wallets waking, it all points to the same truth. The system cannot survive on paper promises forever. And when reality catches up, only those who hold the real, unencumbered asset will have a chance to survive the financial collapse. Every empire dies the same way. Not from war, but from printing lies faster than reality. Bitcoin isn't an investment, it's an exit. Now you know what's really happening behind the headlines, the lies, the manipulation, and the traps. If you want to stay one step ahead and see where the real money is moving before the mainstream even notices, hit that subscribe button. Don't just watch, be ready. Turn on notifications so you never miss an alert, because the next move will happen fast, and you'll want to be prepared. Subscribe now and join the few who actually see the system for what it is.